Hi, welcome to Accounting Play. Today we're going to be talking about liabilities. Liabilities. And we're going to be talking about the T account transactions that you enter your liability debits and credits at. So liabilities. Liabilities come after assets on the balance sheet. What is a liability? Well, in assets, I had some cash to show you. I had some, these are all assets, really obvious, but the liability might be all the money I owe on this computer. Maybe it was purchased on an installment loan. Maybe I have a credit card that I've been using to start accountingplay.com, all hypothetical. That could be a liability right there. Other liabilities might be such as a mortgage and accounts payable. So I might get the internet bill in the mail and not pay it right away. That's going to be a liability. So assets minus liabilities is equity. So you can think about liabilities in the personal sense. If you have a mortgage or a car loan, you could say car bought for $10,000. Now I owe a loan on it $15,000. So assuming that the thing is still worth 20 grand, which it's not, but you might have equity of 5 grand. So liabilities in the T account arena. Liabilities increase with the credit. Credit liabilities up. The opposite of cash. So when you're crediting a liability, it goes up. Debit liabilities down. Okay? So let's get right into it and show you some T accounts here. Here we are on the Debits and Credits ebook. Now I'm just going to go ahead and scroll down and pull up your soon-to-be favorite accounting diagram. We are on the liability section. It's yellow just because I like that color. But really, liabilities are a sign of caution. Watch out. If you're building up debt, I think credit cards are a very common liability. So let's talk about, in accounting terms, some of the things that are considered liability. Number one, accounts payable. Now, what's AP? Accounts payable, the number one liability. These are all the bills that are stacking up and are unpaid. Things that have already happened. I've received the internet service. Now the month has passed, I've received my service, now I'm paying for it. Or I received merchandise from a vendor and I haven't yet paid them, so that goes into accounts payable. Notes payable, that's kind of like a catch-all for debt. That's stuff you owe. That might be a short-term loan. Bonds, that's money borrowed. Accrued expenses, those can be things such as wages. Deferred revenue may be cash that you have received, but you haven't yet earned it. So that's a tricky one. A mortgage payable and a loan payable. So liabilities increase with a credit here. Liabilities increase with a credit. Do not pay attention to this right there. Okay. Liabilities increase with a credit and decrease with a debit. Okay? So we're going to show you how that works right here. Now, accounts payable. One of the most common accounts. You see on the right here I have my increases and decreases. This here is a T account. So for those that you don't know, T accounts, debits on the left, credits on the right. Talking about liabilities. So debit liabilities down, credit liabilities up. Now for accounts payable. Let's go ahead and increase accounts payable. Because it's a liability, we know that that is a credit. 1,000. Let's go ahead and decrease 2,000. Now, this would actually bring accounts payable negative. So we're going to assume that this company already owed $10,000 to start with. So that can be referred to as the beginning balance. So as you move through your accounting class, you'll see accounts will have a beginning balance from the prior year. So right now, this looks like some kind of code, some sort of holy grail here, or unholy grail, let's say. So these are your transactions. What's your ending balance? We have an initial owing 10,000, then another, and then we reduced it. So this was probably a payment in cash. So we could stop here and figure out how much is on each side, cumulative. 11,000 here, 2,000 here, and then we can see how much has gone in and out of the account. So this is greater than this. So we know that it's going to be 11,000 minus the 2,000 with a remaining of 10. So starting at 10,000, increase to 11 minus the 2 is 9. I'm going to go ahead and reverse that. So let's just run through all. Decrease 500. Is that going to be a debit or a credit? Decreasing accounts payable will be a debit, 500. Increase accounts payable, 100, and decrease accounts payable, 600. Go ahead and sum totals. Make sure you include the beginning balance here. So we have an accumulation of 11,100 in credits, 3,100 in debits. Let's go ahead and do this. Combining or netting the two will result in an ending balance of 8,000. How is that going to look in a running total? Increase 1,000. First, I'm going to go ahead and add a beginning balance of 10,000 plus 1,000 minus 2,000 minus 500 plus 100 minus 600 equals 8,000. Boom, we tie. Live it, love it, everything. Right? Click, 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 click. Back to normal. From the top. Just like magic, running through. So this has our final result of 8,000. Now let's talk about notes payable real quick. So, notes payable might be a loan that you took from your brother-in-law or the bank, or it could be even a revolving line of credit, a specified amount of interest tied to something that you're going to pay every so often. So let's go ahead and see what that might look like. Here we have notes payable. Increasing with the credit, 10,000. Beginning balance is 0. Decreasing, 200. Another 200. Increasing, 1,000. Decreasing, 200. I'm going to go ahead and sum those totals here. See what I result in. So the ending is going to be a credit of 10,400. Check that on my right. 10,000 minus 200 minus 200 plus 1,000 minus 200 equals 10,400. There you have it. So, thanks so much for listening accountingplay.com/downloads for more. And email me, john@accountingplay.com, see if I can help you out, send you some other free materials if you can't find them on the website. And I hope this is really helping. Let me know what I can do to make this easier. Apps are in the store to help you. There's a game to go along with this, as well as the accounting flashcards. So please check it out. Again, this was Liability T accounts. Really appreciate it.